In this video, I'm going to show you how students needed to have prepared the statement of financial position as at 31st December 2022. This is a follow-up of the previous video in which I showed you how students ought to have prepared the statement of profit or loss. And this is in response to what was question 2 in the September exam of 2022 for the subject Basic Finance as examined by the Zambia Institute of Marketing. My name is Savoy and I invite you to subscribe to my YouTube channel Captain 37. I also invite you to like and follow my Facebook page Marketing Study in Zambia. Let's proceed with a statement of financial position. Like with every account, our starting point would be to indicate the name of the account, which in this particular case is Chola. And we need to clearly indicate that this is a statement of financial position as at 31st December 2022. This is very important and this is our starting point. Always make it a must to indicate that this is a statement of financial position, including the date, and that it is for Chola or whatever account name it would be. Now, the statement of financial position is very easy because it basically looks at three things. It's going to look at assets, then it's also going to look at liabilities, and it is also going to look at capital. So when you look at these three are what make up the accounting equation. The accounting equation is that assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. And you will see how that particular formula, so important, is going to be applied here for us to know and determine that all our entries are correct. So we'll start with assets. Let me temporarily remove liabilities and remove capital here so that we can start with assets. And it's important for me to state that the assets are classified as non-current assets and current assets. So let us begin with current assets. Our current assets. What are our current assets? When we look at the trial balance that was given, we will observe that our current assets include inventory. And the value for inventory is 25740. What else do we have under current assets? We have got trade receivables. Trade receivables. And the value for trade receivables, now this is very important, please take note of this. Trade receivables, we were told that it is 38200. Trade receivables, we were told that it was 38200. Now, if you take notice, under additional information, we were told that the provision for bad debt is to be adjusted so that it is 5% of trade receivables. What I just said is what is exactly indicated as an additional information, that the provision for bad debt is to be adjusted so that it is 5% of trade receivables. So in the trial balance, we are told the trade receivables, which is 38,200. So now we need to calculate 5% of this particular amount. We pull out our calculator, 5%, 5 divided by 100, that gives us 0.05. We multiply this with 38200 and it's going to give us 1,910. 1,910. What we are supposed to do is to subtract this amount, this 1,910, from this 38,200. From this amount, 38,200, we're supposed to subtract 1910. And what we find is what we need to indicate right over here. What we find is what we need to indicate right over here as being trade receivables. And this is going to be 36,290. 36,290. Very important that you understand this, and if need be, please rewind this video, watch it over again and understand. It's important also, and it would help you if you attempted 1 or 2 more questions of a similar nature. So after trade receivables, what other current assets are listed in the trial balance? There is cash. And for cash, the amount is how much? 1,800. What else? There is rent prepaid. And how much is rent prepaid? Rent prepaid is 7,400. 7,400. Great. This is it. When we add these numbers that we have here, these entries, it's going to give us 71,230. 71,230. This amount here represents our total current assets. Great. And that's it with regards to current assets. We now proceed and look at non-current assets. Non-current assets. Like that. And with regards to non-current assets, we have got machinery. And what else do we have? We have motor vehicle. Now you need to follow very carefully here. Motor vehicle. Now, is this a spelling for motor vehicle? Motor vehicle is spelled like this. Yes, this is the correct spelling for motor vehicles. Please take note of the following. In fact, what I'm going to do is I'm going to move these down there to create some space. So we have the machinery and we have the motor vehicle. What we first and foremost need to do is we need to take note of the costs. The costs of these two items. What is the cost of the machinery? We were told that the cost of the machinery is 40,000. That's the cost for the machinery. We need to take into consideration accumulated depreciation. Accumulated depreciation. We are told specifically that these two items depreciate over a period of time. And indeed, obviously, depreciation is over a period of time. How is the depreciation calculated? So when we look at the statement of profit or loss, in the statement of profit or loss, we did calculate and establish that the depreciation for machinery was going to be 9,600. 9,600. 9,600. I'll write it like that. But also take note that in the trial balance, there's a provision for the depreciation of the machinery, and that was 1,600. So we need to calculate this 9,600 and add it to the 1,600. The 9,600 is going to be added to the 1,600. So we pull out our calculator over here. We have got 9,600 plus 1,600. This is going to give us 11,200. And that's what we're going to write here. 11,200. This is the accumulated depreciation for the machinery at a cost of 40,000 kwacha. At the cost of 40,000 kwacha. In fact, it's important, somewhere right over here, you need to indicate that you're dealing with kwacha and you're dealing with kwacha, and we are going to have a third column which is also going to be in kwacha. This particular third column simply subtracts the accumulated depreciation from the total cost of the machinery, or the total cost of whatever object it is that you're looking at. Because, as you already know, depreciation is the loss of value. So this was the original price. Then over time, the accumulated depreciation is 11,200. So 11,200 from 40,000 is going to give us what is known as the net book value. The net book value. But we'll just write NBV. NBV, and that stands for the net book value. So what is the net book value here? It's going to be this subtract this. So the net book value is 28,800. 28,800. This is for machinery. We need to do the same for motor vehicle, and we have got these subheadings here that we need to work with. So for motor vehicles, what was the total cost? we are told that the total cost for motor vehicles was 95,440, like that, 95,440. What was the accumulated depreciation? We look back at our statement of profit or loss, and we establish that the initial accumulated depreciation that we calculated for motor vehicles was 19,088 kwacha. 19,088 kwacha. Question: was there any provision for this in the trial balance? The answer is yes. There was a provision for depreciation of the motor vehicles at 1,080 kwacha. 1,080 kwacha. It means that we are going to add this particular 19,088 kwacha. Pull up the calculator. I said 19,088 kwacha plus 1080 plus 1080, and this is going to give me 20,168 kwacha. 20,168 kwacha. This is our accumulated depreciation, and it's the one that's going to be indicated right over here. It is 20,168. 20,168. Next is the net book value, and remember that the net book value is this, take away this, and it gives us 75,272. We then do the calculations to add these, and add these. So quickly, this plus this, okay, these two put together, when we add them, it gives me 135,444. 135,444. I'm going to add these as well. When we put them together, that's how much it's going to give us. 31368. We add these as well, and when we add these, it's going to give us 104,072. 104,072. So these are the important. So with what we have done here, we have covered what needs to be indicated in the statement of financial position as these accounting for non-current assets. These accounting for non-current assets. So we are done with the first part, which is basically to look at assets. What we then now need to do is to turn our attention to liabilities. Liabilities. And what liabilities does this particular business for Chola have? What liabilities does this business for Chola have? Where do we get that information? We get that information from the trial balance. We now turn our attention and look at the liabilities for this particular business of Chola. Liabilities. And where do we get the liabilities from? We get them from the trial balance. And so what liabilities do you find there? Let me just start from there. We have got trade payables. Trade payables, okay? And how much for trade payables? For trade payables is 42,400. This information is readily available. What else? We have got bank overdraft. Bank overdraft. And how much for the bank overdraft? We are told that it is 8,700. 8,700. Then there's wages and salaries that we have not yet paid. Wages and salaries, and this comes to 2,520. 2,520. Then we have got office expenses. Office expenses. Okay, office expenses. How much for office expenses? It is 1,200. 1,200. So what then is going to be our total liabilities? Let's just say total liabilities. It's all these put together, and it gives us and it gives us 5,000, and it gives us 54,820. 54,820. This is the total of our liabilities. It is the total of our liabilities. Now let's turn our attention and look at capital. Capital. Now here is something very interesting. I have put capital here. You may notice that in some questions, what's going to be put here is equity. Equity. And in some solutions, what's going to be put here is financed by. So what am I going to put? I'm going to put equity. And under equity, I'll take note of the fact that there is capital. And how much was our capital? Our capital was 80,000. 80,000. Now all this information is readily available in your trial balance. The capital indicated in the trial balance is 80,000 kwacha. We then add our net profit. We add our net profit. Where do we get the net profit from? We get it from the statement of profit or loss, which I did show you how to prepare in the previous video. And we did find that our net profit was 98,082. 98,082, which is 98,082 kwacha. 98,082 kwacha. What follows then is we need to less drawings. Less drawings. Remember that money was taken away from the account, and how much was this? It was exactly 57,600. 57,600. So what does this give us when we calculate, when we sum these together? When we sum them, it's going to give us 120,482, which is 120,482. This is our equity. How do we know that what we have done is correct? How do we know that what we have done is correct? This is where we apply the accounting equation. And the accounting equation, remember, is assets equals capital plus liabilities. Assets is equal to capital plus liabilities. How much for our capital, which is this one, equity? How much? It is this amount right over here, this one. Now when we get this amount and we add it to liabilities, how much for our liabilities? Our total liabilities is this one, remember? This one right over here. This is our total liabilities. When we add this to this, when we add this amount for liabilities plus this amount for capital, does it give us the correct amount for the assets? Let's be clear here that the assets are divided into two. We have got current assets whose value is this one, 71,230. 71,230. This is just for current assets. And for non-current assets, it's this one here, 104,072. 104,072. So the total assets is this plus this. Our total assets is this plus this. When we add this plus this, it's going to give us 175,302. 175,302. That is what's going to be our total assets, or that is the value of our total assets. So that is the amount that is supposed to be here. The amount that is supposed to be here is 175,302. 175,302. Now when we add this plus this, does it give us this? And so let's get our calculator. The number that was here, that is here, is 54820. 54820. When we add to this, the capital, when we add the capital to this liability, the capital being 120,482, it gives us 175,302. 175,302. This is equal to this one over here, which is also 175,302. 175,302. So this is how you apply the accounting equation. This is how you apply the accounting equation to be able to determine whether the entries you have made are correct. If this does not balance, it means that there is one entry or more entries which are not correct, in which case then you need to go back, trace your steps, and see to find where you possibly made a mistake. So this is how students needed to have attempted part of question 2, which was in the September 2023 exam in the subject Basic Finance as examined by the Zambia Institute of Marketing. This is what a student needed to have done. My name is Savoy, and I invite you to subscribe to my YouTube channel, Captain 37. The 37 is a number. I also invite you to like and follow my Facebook page, Marketing Study in Zambia. I'll see you in the next video. Goodbye.